There you go. You've all been tweeted this morning, so good way to start. Listen, good morning, everyone, and welcome very much to this Toronto Financial Services debate in the middle of an important provincial election. We really appreciate you taking the time to come this morning, and we certainly appreciate the time of our three representatives of our main political parties. We certainly appreciate their time this morning. My name is Janet Ecker. I'm the President and CEO of the Toronto Financial Services Alliance, and the reason we do this is to make sure that this industry remains top of mind. This industry suffers a little bit from sort of a good news, bad news. The good news is it's doing well and it's important to the economy. The bad news that with all the pressures that our political leaders have with other issues, it's easy to take it for granted, and we want to make sure that its success isn't. So that's one of the reasons we do this. So we're very pleased to have joining us today, and I'll start from my left, Mr. Michael Prue, who's the new Democratic candidate for Beaches East York and is very familiar with this chamber as an elected councillor here many years ago. And next to him, of course, the Honourable Charles Sousa, our Finance Minister and a member of the Liberal Party and the Liberal candidate for Mississauga South. And to my far left, it's probably the only time I can say that, Vic. Sorry, I couldn't resist. And Vic is the Progressive Conservative candidate for Nipissing, and of course is a former mayor, so he says his chamber was a little bit different size than this one. So we appreciate all three of them taking the time to attend and to do this. Not only, of course, are we going to be, people are going to be tweeting incessantly, I'm sure, but we're also going to be recording the session to put this on our website, the TFSA website, so those of you, if you really liked what you heard, you can capture it. If you have colleagues that you want to make sure that they hear and see what was said here, please encourage them to do that. I'll touch base on the debate rules, but just quickly, a couple of quick facts on the table to put the context in this for all of us. We have over 330,000 individuals, direct and indirect jobs that depend on the financial industry in the Toronto region. And that employment has actually risen by some 25% in just over the last decade, while I'll call them competitor cities, London and New York, have actually decreased. So it tells you about the success of this industry and how well it's done, but also to the critical importance, because about 20% of the GDP in this region reside or rests on that industry. So again, it underlines that incredible connection between financial services and the economy. And also something that we like to talk about now is the growing global footprint of the financial services industry, because Canadian exports of financial services have more than doubled over the past decade, and that's the best performance of any sector. So they are growing global players headquartered here in Toronto region, which is good news for all of us. So hopefully this morning's debate will allow us to touch on some of the issues that are important to the various pieces or sectors, if you will, of the financial industry, as you can see from all the logos up there. There's a lot of breadth and depth to the financial services industry that contribute to those 330,000 jobs just in this region. So now I'll just quickly run through the rules of the debate and the questions, how we're going to do it. And we've drawn beforehand, we had a draw for the opening, closing, the order of speaker for everybody here. I would like to just say yes. So there's going to be a 2-minute opener and closer statement for each of the candidates. And then we'll have one question from each of the various associations representing a segment of the financial services industry. Each candidate will have 90 seconds to respond, and we'll go down the row. And excuse me. The other thing I should say too is that so many of the issues in this industry, they're quite technical, and I know many of you here in this room are exceedingly expert in your field. So having sat at many all-candidates debates myself on many, many issues, we're not testing the candidates on technical merit here, so be kind when you ask technical questions here of them. Okay, so let us start then. Oh, the other thing I should mention is a member of my team, Monique Cannert. Monique, where are you? There's Monique. Yes, and she is probably the most important person in the room at the moment. She has a yellow paddle when the candidate has 30 seconds remaining, and a red paddle. I need another cup of coffee myself this morning. A red paddle when their time is up. So, ladies and gentlemen, and we'll see if we can raise the intellectual content of the discussions that happen in this room from time to time, without me naming any names. I'd like to start and call on the first speaker of the morning, Mr. Prue.
Thank you very much, Janet, and thank you very much, ladies and gentlemen, for coming here on this very important day for the financial industry. I sort of got my financial feet wet, not by sitting around this chamber, as you might, but actually from being the mayor of East York, which is now part of the greater city of Toronto. And when I took over as mayor of East York, we had a lot of financial problems. And we were in some financial difficulty in terms of making the municipality grow. It fell upon me as the mayor to try to find a way out of that. And we involved people from the financial sector. We involved people who had technical advice, and I listened very carefully and clearly to them. And by the time of the amalgamation, 5 short years later, East York, as the mayor, I had paid off all the debts. I had not raised taxes a single penny. We had built an infrastructure. We were actually going to have a budget surplus in the following year, but unfortunately we got amalgamated. It's part of the reason I think that I was chosen to be the finance critic for the NDP. I firmly believe that you have to grow the money. You have to grow the ability of a province, of a city, of a country. The money has to grow in order to do all the other things you want to do. So I'm here to talk to you, to listen to you, to try to answer your questions, which are, of course, highly technical in nature, but to do so in a way that there is an end product. The end product is not only to make you prosperous and to grow, the end product is also to be able to take that money and to do good things in Ontario. Part of that is, of course, the creation of jobs. Part of that would be the elimination of poverty. Part of that would be the building of the infrastructure. And I look forward to the debate and your questions in order to try to come to some kind of consensus on how we go forward. Thank you very much for inviting me.
Thank you very much, Mr. Prue. Mr. Sousa.
Thank you, Janet, and everyone for attending today, and the Toronto Service Alliance for hosting this. And also, let's take a moment to remember our heroes as we recognize the anniversary of D-Day today. I know that all of us have some important choices to make on June 12th, and the choice is quite clear. We have a choice for a budget that I introduced only weeks ago, a very balanced and progressive budget that talks about creating real jobs and growth, to that of Tim Hudak's cuts. A choice between a roadmap to protect our economic recovery versus a plan that Mr. Fedeli will talk about in regards to slashing services, healthcare, and education, and more. And over the past year, our economy has strengthened, and many of you know this. You're an informed group who recognize that Ontario has created over 100,000 jobs just last year, and this month alone, we again are continuing to rise in permanent jobs. Ontario, in fact, as you know, is the #1 jurisdiction in all of North America for foreign direct investment. That doesn't come by accident. We have beaten out California and New York because of the work that we're doing to attract investment in our province. And our economy is recovering, but it's still fragile. So the plan that's being proposed by Tim Hudak and company for those across-the-board cuts puts that at risk. Our plan is indeed different. It's about investing more in transit. It's about predictable funding. It's about, I can tell you from direct experience, it's about making certain that we overcome the crippling effect of congestion. And I'm doing my utmost, and we all have to do that, to try to get to work and home more safely and more quickly. But more importantly, we want to make certain that goods get to market more quickly. That's what makes us competitive. And that only comes because of investments we make in our people, strategic investments we make in infrastructure and capital so that we can be competitive, not by cutting that off. Those are critical. That is what enables us to improve our economy, and we do that by having a very dynamic and competitive business climate. We have one of the lowest tax rates anywhere in North America. And we've also introduced a common securities regulator that was signed in my office, all with the intent of making us competitive for the financial services industry. My plan is practical, it's realistic, and it's fully costed. And we got the math right. That's critical. Recognize that some will pride themselves on being economists, but they can't even do the math effectively.
And we
I think
need to
that's
get the
critical
time right.
for your leadership. Thank you.
Sorry about that, Mr. Sousa. Mr. Fedeli.
Good morning, everybody, and I want to thank the TFSA for hosting this again this year. It's a great opportunity for all of us to get together and have a good conversation about the state of the economy and the state of Ontario's finances. Friends, 1 million men and women woke up this morning either without a job, given up looking for that job, or are looking for a better job. And only the PC party and our leader, Tim Hudak, have a plan to put 1 million people back to work over the next 8 years. Charles, Michael and I toured 8 cities together since Christmas on the pre-budget consultations. And after that, I took a tour of 22 additional cities. And we all heard, all 3 parties heard exactly the same 3 things from men and women, whether they were in business, the Ontario Chamber of Commerce, the Canadian Federation of Independent Business, or whether they were the Social Planning Council of Kitchener, the Food Bank in Sarnia. We heard the same 3 things: skyrocketing hydro rates, high taxes, and red tape. Those are the 3 things that are hurting the economy, costing us jobs, and hurting families. We have a $12.5 billion deficit in the province of Ontario. Grew from $11.3 billion last year, which grew from $9.2 billion the year before. There are real cuts that came as a result of that. Physiotherapy for seniors, cut. Cataract surgeries for seniors, cut. Diabetes testing strips, cut. All because they can't balance the budget and they're looking for places to find, I call it change in the couch. In my hometown of North Bay, 40 nurses have been fired, and only 2 days ago, 60 beds were announced to be closed in a brand new hospital. Why? Because we can't balance the budget. Only Tim Hudak and the PCs have a plan to balance the budget, and we'll balance it in 2016-17. Thank you. I'm looking forward to this today.
Thank you very, very much, Mr. Fedeli. Thank you to all 3 of you for getting things off to a very, very good start. Our first question is from the Insurance Bureau of Canada. So that's the group that represents our P&C and our auto insurers in the province. And Doug Darabi, who's the Director of Government Relations from the Ontario region, is going to be asking us that question. Doug, over to you.
Great. Thank you, Janet.
And we'll be starting with Mr. Fedeli for the answers.
Okay, great. And I want to also say thank you to Mr. Prue, Mr. Sousa, and Mr. Fedeli for being here this morning. Really appreciate it. As Janet mentioned, the Insurance Bureau of Canada has been working for the property and casualty insurance industry for 50 years now. Our industry is one of the most competitive and active sectors of the economy, contributing $4.1 billion to the real GDP. We have establishments in more than 250 communities and employ more than 60,000 people across the province. In fact, for every job in the insurance industry, 2.8 jobs are created across the economy. On the topic of auto insurance, companies cannot lower or increase rates unless approved by the government. Applications for new rates take many months and involve the preparation of submissions that are lengthy, complex, take a long time for the government to review, and expensive in that they require actuarial and other professional input. Our question: do you favor a simple process where companies file the rates without all of the complexity of the current system so that companies can file for decreases and process them right away?
Doug, thank you very much. And the order, just to remind everybody, will be Mr. Fedeli, Mr. Prue, and then Mr. Sousa. Mr. Fedeli?
Well, thank you very much, and thank you very much for the question. Jeff Urich is our auto insurance lead for the PC party, and as many of you have met with him over the last 2.5 years, you would know that he has indeed put a detailed plan together to address this. We know that when customers save on their auto insurance, that they're going to be investing their money into things that matter most to them, their business and their families. So currently, as you well know, I mean, this is a very technical question, and so I'll try to give you the specific answer. But as you well know, we don't have a system in Ontario today where auto insurance providers can rapidly respond to the needs of their consumers. And as you also know, it takes insurance companies 3 to 6 months, perhaps even up to a year, to get their rates approved by the government. So to your point, we need fewer bureaucrats and more competition. This will open the market to innovative products. Hopefully, it'll lead to dynamic pricing. This is an opportunity for discount-based drivers' behavior. So this is the very specific answer to your question. We believe the province should adopt a file-and-use rate-setting process. So this would allow companies to lower prices quicker, ensure greater market competitiveness, and encourage a wider range of discount offerings. Taken together with our other reforms, like making the dispute resolution process more effective, combating auto insurance fraud, this would lead to a fair, well-functioning marketplace for auto insurance and lower prices for consumers.
Thank you very much. Mr. Prue.
Yes, we all believe that the process should be faster, it should be easier, but the NDP wants to also balance that with the needs of the consumers. We have had many, many complaints over the last few years about the high cost and the soaring cost of insurance rates, particularly in the Toronto area. We have had complaints of people who literally live across the street from each other and see 2 different insurance rates based on postal code. We have had complaints of people having one minor accident and seeing their rates skyrocket. We have complaints from people who move in from other provinces and see that the insurance rates here are double or triple what they paid in either Manitoba or Quebec. And we as a government will ensure that the consumer is protected. So no, I cannot go completely along with what you're saying. Do I want it to be speeded up? Absolutely. Will we work with you to speed it up? Absolutely. But in the final analysis, we think that the system has to protect consumers as well. And in the final analysis, we think that the rate application process that is in place now, pending the 15% reduction, needs to stay in place. And that if it does, that the consumer will be protected. And we think that this is a preferable regime and that everything ought not to be the prerogative of the insurer, but also needs to be in part the prerogative of the insured, and that the government has a role and the person who is seeking the lowest possible rate has a role to make sure that that is accomplished.
Okay, thank you very much, Mr. Prue. Mr. Sousa.
Thank you. As you know, the Ontario Liberals have been working on finding ways to reduce auto insurance, making it more affordable. We've introduced legislation in 2003, 2004, and of course we've been working very closely with the stakeholders and FSCO to try to work with the groups to reduce those rates by combating fraud and by finding ways to reduce the cost of those claims. Since that inception just a year ago, we've now reduced auto insurance rates by about 6%, in keeping with our target to get down to 8% by August, as we said we would put forward, and as was agreed, at least by one side. We have made a commitment to have it reduced by 15% by working closely with the stakeholders. There's a lot of rhetoric, because when we put forward this budget, it included measures to look at the transformation of the dispute resolution system. It looked at further measures to reduce fraud. It talked about finding ways to go after the towing and the vehicle storage and collision repairs, as well as reward safe drivers. But the NDP triggered an election that would have helped us further this very issue. And the PCs go on about wanting to make this happen, yet when they were in power, it went up 43%, and they didn't listen to you. When you warned them then, in 2001, if we didn't take proper action, these things would happen. So when we came into power, we started to take that action, and we recognize that more needs to be done. We will certainly work with IBC. We'll find a solution, and we'll work with the groups necessary to reduce those costs of claims. That, in essence, it's what's going to make premiums go down. We have a competitive system. We have over 120 companies out there competing for this space. We have well over 12 companies already offering 10% reductions in their premiums. So we'll continue to do what's necessary to fight for the consumer.
Thank you very much. Okay, on to the second question from the Canadian Life and Health Insurance Association, which, as its name implies, has something to do with life and health insurance. So, Leslie?
Thank you. The financial services industry has earned the respect of the world in the wake of the 2008 global financial crisis. Now, it also plays a central role in the existing, very successful mixed public and private sector approach to providing retirement income to Ontarians. In fact, the current system has managed to reduce the poverty rate among seniors from 35% 30 years ago to 5% today. Improvements can always be made, but it's useful to understand just where any shortfalls might be. For instance, a recent McKinsey study highlighted that there are roughly 23% of Ontario workers who might have an income shortfall in retirement, but the majority are already well positioned through existing government programs and private savings. Our question is, what role do you see for Ontario's financial sector in any strategy to help address the gap in retirement savings for that 23% who may have a retirement shortfall?
Thank you, Leslie. And the order on this one will be Mr. Sousa, Mr. Fedeli, Mr. Prue. So, Mr. Sousa.
I believe there's going to be a few questions around retirement security. You're talking about the private sector's involvement in the retirement security space. And as you know, I delinked the pooled registered retirement pension plans in the budget in 2013 to provide greater options for companies to offer voluntary measures. And we have introduced that option as part of the savings vehicles to proceed going forward. We recognize that there are too many Ontarians, 2/3 of them don't have a workplace pension plan. And many of them are reliant only on CPP and OAS when they retire. Of course, they'll have other factors. What we need is a supplementary plan. And that is why we're also introducing the Ontario Retirement Plan to work closely with other provinces. But we're releasing immediately the pool retired registered pension plan so that companies and consumers and employees have the availability to further their retirement plan. And it would also come in conjunction with the reduction of EI when they start coming off the system. So we will continue to do that. It's unfortunate that the federal government and the HUDAC PCs do not see it appropriate to introduce formal retirement plans that will enable people to have greater savings in the system. That ultimately is what will proceed with enabling us to have greater disposable income and, in fact, reinvesting into our economy by those pension companies. And the NDP, frankly, abandoned any talk about retirement in their platform. And again, it was something that was very progressive in this budget. We included both pool retirement pension plans as well as the Ontario Security Supplementary Plan to mirror the CPP.
Takes almost as long just to name the titles of some of these programs. Mr. Fedeli and then Mr. Prue. Mr. Fedeli.
Thank you very much. Well, government can indeed do more to encourage private sector businesses to offer pensions that are portable, affordable, and available in most workplaces. First, it's impossible to save for retirement if you don't have a job or a growing paycheck. So our Million Jobs plan will put people to work and allow them to keep more of what they earn in the first place. Secondly, we need to make life more affordable with lower hydro bills, auto insurance rates, and government services that don't send people into debt. Now, third, and to your point, we do need to expand the number of workplaces able to offer pension plans to their employees, and we've put forward a plan to do exactly that. PRPPs create a simple, easy-to-use system for automatic saving. This is especially important for small business owners and their employees who will now have access to large-scale, low-cost pension plans for the very first time. Also with professional administration working to ensure that the funds are invested in the best interest of the plan members. So for anyone with the pension plan through work, you know how easy it is when you can just simply check a box and you're instantly in the program. What we will not do is support the ORPP that the Ministry of Finance documents released to the Minister and to the Premier state that for every $18 billion you will lose you will lose 150,000 jobs by initiating the ORPP. For every $2 billion, you will lose 18,000 jobs in the province of Ontario, and that's why we will not support that program.
Thank you very much, Mr. Fedeli. Mr. Prue.
First of all, let me preface my remarks by saying that whatever we do and however we go forward, the people in this room need to be consulted first. This is a highly complex issue, not only to the three of us sitting up here, but also to many of you, and certainly to the general public. They have a hard time getting their head around what is a PRPP, a defined benefit plan, a defined contribution plan, how much it's going to pay, when they're going to get it. And we need to make it simple for them to understand, and we need to do it politically for them to accept it. New Democrats believe that we need to, first and foremost, the most ideal thing to do would be to enhance the current CPP plan. It's already there, it's already vested, it already has the expertise. You don't have to add any more bureaucrats, you don't have to spend any more money. You just have to simply have to raise the amount that you're taking in and then pay out at the end. It is far preferable to the OPP that was put forward in the budget. Now, I'm not opposed to the OPP. I was the first one to raise it in the legislature. I raised it when I ran for the leader of the New Democratic Party. We actually had a motion put forward in the House, which the Liberals and Conservatives voted against last year. So all of a sudden, it's their idea, and it's a good one. You know, I love to see this, because this is what happens in the legislature. But we think that you have to wait. We think that there's a federal election next year, and that there is every probability that this will be a major election issue, and that whatever government comes into place will enhance the CPP. We simply want to wait. And if we wait, again, I'd like to come back to all of you to find out and to base the new plan on a much better plan going forward than the federal government has done with their PRPP program.
Thank you. Thank you very much. Thank you, Mr. Prue. Okay, we'll be going to question 3. The order on that will be Mr. Prue, Mr. Sousa, Mr. Fedeli, and it's from the Investment Funds Institute of Canada, John Cockerline. John, where are you? Oh, there you are, right there.
Thank you, Janet, and thank you, candidates, for the opportunity this morning. The governments of British Columbia, Ontario, and Canada have agreed to establish a cooperative capital markets regulatory system, the so-called CCMR. The announced objectives of this initiative are to better protect investors, to enhance Canada's financial sector, support efficient capital markets, and manage systemic risk. The Government of Ontario, as one of the founding members of the CCMR, will have an important influence in the design and operation of this new regulatory framework. One of the challenges of Canada's existing framework is the absence of a regular red tape review to identify regulations that have become redundant or obsolete. Will your party honor the agreement to move forward with the CCMR? And what instructions would you give to the Ontario Ministry of Finance officials participating in the drafting of the underlying legislation and agreements to ensure that the new CCMR maximizes the opportunity to foster an efficient regulatory framework and culture through the ongoing review of its regulations?
Thank you very much, John. So the order, Mr. Prue, Sousa, and Fedeli. Mr. Prue.
Yes, about 10 years ago, I'm trying to search now in my head to how long ago this was. I was sitting on the Finance Committee as a fairly new MPP, and we had a great deal of discussion around this, about capital markets, about stock trading, about many, many things. And, you know, it was so complex, but at the same time, not only was it complex, there were errors being made within the system. And in spite of the fact that there were, you know, the regulations were there, they simply weren't being followed. And all parties made recommendations, you know, about simplifying. And all parties, and I still believe that we need to simplify the process, precisely as you were saying. We do at the same time need to ensure that investors, the public is safeguarded, but we want to work with you, and I think that this is the whole thing, comes down to working with you to make sure that the financial regulations are simplified, but they have to be done in a way that protects investors and the public at the same time as making it easier for financial institutions to make money. And so in the short answer is yes, we agree, but we want to do it in a way that is well thought out, with much discussion, and my instructions to the bureaucrats would always be, if you don't have to do it, don't.
Okay, thank you very much. Mr. Sousa.
Of course we're going to proceed. I mean, the deal was struck in my office. I was the one negotiating with British Columbia to put forward a cooperative securities regulator. Then the federal government called, asking if they can participate in what it is that we were proposing. We know that this has been discussed for many, many years. And I give credit to so many, especially those in this room, who have understood the need to have a much more efficient and competitive single system. But we want that system to also be housed with the expertise that exists right here in Ontario. And that is that's the deal we struck in my office. Now, since then, we've been negotiating and we've been trying to get agreement from other provinces. 2/3 of the capital markets, it's now covered under the umbrella of our cooperative securities regulator. It is also a matter of reputation. It's also a matter of how do we attract better investment into Canada and into our province. And of course, we want to show some encouragement to go forward in those issues. It creates real jobs. It's not fanciful. I know that some will talk about wanting to postpone it. Well, last thing we need is another regulator. And of course, I'm committed to trying to reduce red tape. That's the whole purpose of why we're putting this forward, to be competitive. And I'm encouraged by the discussions that we're having right now. Ontario does hold the pen. We are working very closely with British Columbia and now many other provinces who want to come on board. By the time we're done, we'll probably have the Maritimes and the Territories and some of the Western provinces involved. That'll be a great push forward. What we don't want, and what Ontario has resisted, is the passport system that's being proposed through Quebec and Alberta. I think now they're coming around to what it is that we're trying to do. That reduces red tape, makes us more competitive going in the future. Thank you.
Thank you very much, Mr. Sousa. Mr. Fedeli.
Thank you very much, and thanks, John, for the question. The answer is simple, absolutely, plain and simple. We believe that the securities regulator should be located here in Toronto as well, and we think that it would serve as a tremendous boost to the already competitive financial sector here in Toronto. I want to speak to the broader issue then that this represents about barriers trade barriers that exist within our own country. It makes it very difficult to deal from province to province, not just in the financial sector, but in other industries. Engineering is a good example, where engineers need to pay fees in different provinces, different qualifications in each provinces. The fees aren't related to the number of employees. I can give you another example, trucking sector, where the trucking sector has different rules in each province as well, and this is costing us jobs. I mean, in the trucking sector, it could be the size of a van, it could be the number of axles. So we are looking to, in our Million Jobs Plan, to broaden free trade, interprovincial free trade to begin with, whether it's in the financial sector, the engineering, the trucking, the examples that I used, but free trade from province to province. And a big part of that will be through our red tape review. Sadly, the Red Tape Commission that was brought in by the previous PC government and was served on by all parties was cancelled in 2003 by former Premier Dalton McGuinty, and that was an unfortunate day because what we've seen from there is that red tape has grown to almost 400,000 rules in Ontario today. Thanks.
Okay, thank you very much. We'll now move on to question number 4, and the order will be Mr. Fedeli, Mr. Prue, and Mr. Sousa. And we'll call on Bill Moran from the Credit Unions of Ontario. Bill?
Good morning, and thank you. So according to Industry Canada, small businesses accounted for 78% of all private sector jobs created in Canada from 2002 to 2012. The May 2013 Canadian Federation of Independent Business Battle of the Bank Survey ranked credit unions as the preferred lender to small business in Canada. So to us, the math is pretty simple. As credit unions grow, they will lend more and more to small business and in turn create more jobs. Considering that jobs and the economy are top issues in this campaign, my question is, what will your party do to promote domestic investment in Ontario by supporting the growth of Ontario credit unions?
Thank you, Bill. Mr. Fedeli.
Thank you very much, Bill, and congratulations on your new role in the credit unions. We wish you the continued success. Credit unions across Ontario are very important lenders, especially in the small communities. I live in North Bay. I'm a northern boy, and certainly we see the importance of credit unions throughout Northern Ontario and rural Ontario as well. Tim Hudak and I had a very, very good meeting with the credit unions recently, and you brought forward some very good ideas to reduce red tape, something I spoke about a moment ago, but also to allow for a higher amount of coverage for deposits. One of the things that I found most interesting in our discussion were the differences between how we handle credit unions. And when we talked about the tax sale of properties was a really good example. And look, I've been finance critic for 6 months. I was energy critic in Ontario for 2 years before that, so this was very new to me, and I listened attentively as they talked about that a certified check is required on a tax sale property, but it can't be from a credit union. And I found that to be really quite interesting. I was not aware of that. And so obviously, we believe in open competition. We found the same thing with OSAP, with student loans. So I was quite fascinated by that. So we look forward to continuing the discussions with you about how we can have what I would call a more open competition within all institutions.
Okay, thank you very much, Mr. Prue.
Thank you very much. For the past 13 years at the legislature, I've done everything I can to help credit unions because I believe that they are a preferred method of banking for many Ontarians who find it difficult to deal with the big banks, but who also like the small town, hometown flavor of walking in without a lineup. Usually, and with somebody that knows them and trusts them and can deal with them on a one-to-one basis. We have a three-part plan in the NDP that we want to put forward. It's a pretty simple one. The first one is to maintain the current credit union provincial tax rates in order to allow you to know where you're going. Second is to show confidence in Ontario credit unions by increasing the deposit insurance limits. And it should be the same as for the banks. I don't see any difference between you lending money and them lending money. And last but not least is to permit credit unions to diversify by allowing Ontario credit unions to own 100% of credit union subsidiaries. And I know that this is a little bit contentious, but the credit union movement has been around a long time. I see no evidence of any wrongdoing at any time on this, and I think that you should be able to branch out in the same way that the big banks do. And so we would go that far.
Well, thank you very much, Mr. Prue. Mr. Sousa.
Thank you. I made it clear in the budget that credit unions and Caisse Populaire play an important role in Ontario's economy. We all recognize that. And modern regulatory framework that enables those credit union systems to flourish and protect members is essential. And that's why we did take the step in this budget not to change the tax rate for the credit union. We didn't touch that initiative. And we are looking ahead, and as we announced in the budget, a full review of the 1994 legislation that governs this industry. Our intention is to update the legislation and regulations, work closely with the members of and the stakeholders of the union, of the credit unions, to ensure that we grow our economy. And it's essential because credit unions have done a tremendous job in providing access to capital for small businesses especially, and even for some startups. And it's that domestic investment in our local economy during the times of the recession that were so important. And if it wasn't for some of the stimulus that we added into the economy to do just that, which the PCs have said they would not do, is exactly why it is that we are weathered the recession in such a way, and why so many of your members and companies have been able to improve their productivity by reinvesting in those things that your members have been able to put forward. So we'll continue to become a welcoming community. We'll continue to work with credit unions and other forms of capital that will be made available to those that are acquiring it. And it's essential that we continue to foster and as well protect consumers and protect your members so that we can do just that. And I congratulate you for putting forward, especially in rural communities where it's even become more difficult, that ability. So we'll continue to invest. We'll continue to also garner the support necessary for credit unions to do what's necessary on behalf of their members.
Thank you very much, Mr. Sousa. We'll now go to the fifth question today, which is from the Canadian Bankers Association, from Alex Chaparra, who's the Director of the Economic Analysis Branch with them. Alex, there you are. Sorry about that. And the order here, will be Mr. Sousa, Mr. Fedeli, and Mr. Prue.
Thank you very much, Janet, and thank you very much, candidates. The CBA represents 83 banks, of which many of which are headquartered here in Toronto, having employees based in Toronto. They've lent about $171 billion in business lending to businesses in Ontario, and we've seen a 38% growth rate in that since 2009. Provincial governments are well aware of the reasons for maintaining a competitive tax environment. A competitive tax environment stimulates growth by providing a strong incentive for businesses to invest and innovate here rather than in other jurisdictions. To further this objective, Ontario eliminated all forms of capital taxes, as a strong economy requires capital investment as well as strong banks, which are required by law to hold large amounts of capital for safety and soundness purposes. Taxing bank capital runs counter to the government's objective of growing the economy, as each dollar of capital held by a financial institution multiplies into many additional dollars of financing to businesses and other economic sectors. With this in mind, what are your views on keeping Ontario free of capital taxes? And more specifically, do you have any intentions of reinstating the general capital tax or a capital tax on financial institutions?
Thank you, Alex. And it'll be Mr. Sousa first.
No, our government actually eliminated the capital tax, and we're not bringing it back. Through our tax reforms, we've now cut the marginal effective tax rate in half. And I've sat many years looking at ways to become more competitive for our financial services industry and for our many companies that require investment in capital. You should know that both the PCs and the NDP, however, voted both against that when we brought it forward. And our reforms are working, because they are making it more effective, more competitive as a result of eliminating the capital tax, and also introducing capital cost allowance and accelerated capital cost and a number of other things that we brought forward. And as a result of that, as I stated earlier, we are the top jurisdiction in North America for foreign direct investment. That's not us saying it, that's independent sources, recognizing that Ontario has now surpassed California, New York, and anywhere in North America for that investment. And that only comes because we are in a competitive world. And in order to win, we must compete. The PCs have said that they call that corporate welfare. That is exactly what we must do in order to attract those businesses to come to Ontario. That is why we've got companies like Cisco and OpenText. That's why we've worked closely with other sectors in aerospace and auto and ICT and life sciences and in mining, for example. Those are the kind of benefits that come from removing the capital tax, and we will continue to work closely to ensure that that continues. We're not using extreme Tea Party economics here, which is being proposed at the expense of many of our companies who will be put at risk and put us further into an economic downturn if we don't take the course of being balanced, and we must take a balanced approach.
Thank you very much, Mr. Sousa. Mr. Fedeli.
Thank you very much. The simple answer is no. We have no intention of reinstating the general capital tax or the capital tax. We believe in lower taxes, less government. That's how you create jobs and put people back to work. We talked about it earlier. There's 1 million men and women out of work in the province of Ontario. Our Million Jobs plan will lower Ontario's business taxes by 30%. We need to do this in Ontario. First of all, we already have the highest payroll taxes in the country. This is a disincentive to putting people to work. So lower taxes create jobs. After the budget is balanced, we will be lowering personal income taxes by 10% as well. We will not be proceeding with any of the new Liberal taxes that were introduced in this budget. We will not be proceeding with the personal income tax hike. We will not be proceeding with the new tax on aviation fuel. We heard from the Chief of Air Canada that this will cost the industry $100 million this year. And raise the price of your airline tickets. We will abolish the College of Trades and the new trades tax, the WSIB tax, the eco-taxes, and we will not be proceeding with the massive payroll tax, the ORPP, that will, according to the Ministry of Finance's own documents to the Premier, cost this province 150,000 jobs.
Thank you very much. Mr. Prue.
You asked a simple question. I want to give you a simple answer, and it's the same, not unlike my colleagues. No, we're not going to go down to the capital tax route. We know that much of the money needs to be spent on plant and machinery. We know that if you do impose such a capital tax, there will be much less plant and machinery put in place. And so we understand that we need to grow the economy, and we are committed not to raise this tax. If you look in our campaign budget, you will not find any reference to it. It is an idea that may have existed at some point in the past, but it no longer has any economic relevance in today's world. Having said that, we also have to get industry, commerce to understand that Canadians and Ontarians are expecting a great deal more when there is corporate reductions in taxation. You know, the late Jim Flaherty and Mark Carney both said it very well. Industry and commerce is sitting on trillions of dollars of money. As a result of those tax cuts, which were supposed to create jobs and did not, you know, people are sitting there wondering what's going on. There has to be some kind of incentive or some kind of mechanism that wants all of you to go out and spend that money to create those jobs, to get the economy moving. We cannot languish in an economy that has a 1 or 2% growth rate a year. It is simply not sustainable in the long term.
Thank you very much, Mr. Prue. We'll now go to question 6, which is from the Association of Canadian Pension Management. The order will be Mr. Prue, Mr. Sousa, and Mr. Fedeli, and I'd like to call on Andrew Harrison, who is the chair of their board. Andrew.
Thank you, Jonathan. Thank you, candidates. The Association of Canadian Pension Management, or ACPM, is a national non-profit organization that advocates for the improvement of the Canadian retirement income system. We act as the informed voice of plan sponsors, administrators, and their service providers. We've proposed a 5-point plan for improving retirement income coverage in Canada, and we've published papers dealing with pooled registered pension plans, which have been referred to already, and target benefit plans to encourage the provision of more options for Canadians. Our plan emphasizes the vital role that workforce plans play in providing retirement income coverage. This reflects our view that Canada's 3-pillar retirement income system serves most Canadians well, and that there is no one-size-fits-all approach for shoring up the system for future retirees. In particular, our approach embraces the view that private sector defined benefit, or DB, pension plans have long been a foundation of our retirement income system, and that Canadians' retirement income adequacy depends on their continued viability. Various temporary solutions have been implemented in the last several years, but they deal with DB pension plan funding only in the short term. So the question is, how would your government support the viability of private sector DB pension plans now and in the long term?
Thank you very much, and we'll start with Mr. Prue.
Yes, the New Democratic Party position is a simple one. We look to Professor Arthur's, his report, and the recommendations that were made in that report. We know that some of the recommendations have borne fruit, but many of them are still sitting there. And we think that his entire report needs to be implemented, and especially along defined benefit pension plans. We know for a while that many of the defined benefit plans were in trouble as the stock market plummeted. But thankfully, and most of those have recovered, and some of them are actually doing better today than they were before the stock market collapse of several years ago. But having said that, we want to strengthen the existing system. We want to do it as Arthur's has suggested. But at the same time, we also understand that we have to move forward with CPP enhancement. That is our required goal. We know that $1,200 or $1,000 a month is not enough to sustain people in retirement. It needs to be enhanced. And we would enhance the CPP, and we expect this to be a major issue in the next federal election. Failing that, we would go to an Ontario pension plan. But I want to let the federal government have the first option because it is the cheapest and best option for all Canadians.
Thank you very much, Mr. Prue. Mr. Sousa.
Yeah, there's an entire section in the budget just devoted to our plan to make defined benefit plans more sustainable. We're working, and we continue to work with you to make sure the funding rules make sense for the long-term viability of those plans. And where they don't, well, we'll make the necessary changes. But more fundamental than that, we're looking at targeted plans and how they best can fulfill the gaps that exist in our system. Pensions, as you all recognize, is too important to an issue, and we can't get that wrong. We must do everything necessary to protect the private sector plans and the defined benefit plans, and that's exactly what we're encouraging to do as a fundamental pillar of retirement. And that's why also that we're exempting those with workplace pensions in the Ontario Registered Pension Plan. The Conservatives have made it clear they want to gut public sector defined benefit plans by moving employees into DC plans, and that's bad for public sector plans. But it also puts the whole defined benefit structure in question. We want to make certain that strong defined benefit plans in the public and private sector exist, and that's why we want to also ensure that without those with a pension plan that they have greater access. And contrary to Mr. Fedeli, the federal finance officials from the Federal Ministry of Finance have said that supplements to a pension plan or enhancement to CPP is beneficial for the economy in the long term. David Dodge has written a long paper in regards to what it is we must do for the long term. You can't have short-term vision on this. You got to think long-term, and you can't kick the can down the road in hopes that some other government will take a hand. If it's not now, then when? If it's not us, who? We must act now to protect those without a pension plan.
Thank you very much. Mr. Fedeli.
Thank you very much, Andrew, for the question. The recession did indeed expose how vulnerable many pension plans are to downturns in the economy. Many plans have responded to unfunded liabilities by increasing the contribution rates to address these shortfalls. The issue is that the contribution rates are now at the upper tier of what the province can practically afford. Contribution rates are also at the upper tier of what many individual workers will likely agree to contribute. That's why it's important to make sure that all Ontarians are saving for retirement, and that includes providing various ways they're able to save, like the PRPPs. As I said it earlier, what's more simple than being able to tick off a box on something that's affordable and portable? The Canadian Federation of Independent Business, the Ontario Chamber of Commerce agree with our strategy. But again, I have to reinforce, because this is so very important to so many people in Ontario, that we absolutely reject the new government scheme on the ORPP. We know from the internal cabinet documents that Kathleen Wynne and the Finance Ministry were warned that these payroll taxes would have, and I'll read you the quote, largest negative impact on employment. They state that it would cost, according to their own analysis provided to the minister and provided to the premier, if you go ahead with this, it will cost you 150,000 jobs in the province of Ontario. 80% of small business people agree with that. 50% of small business people said they would they would cut jobs. That's exactly what the ministry warned would happen if the province goes ahead with the ORPP.
Thank you.
We reject that.
Thank you very much, Mr. Fedeli. We'll now move to our final organized question, if I can call it that. The order on this one will be Mr. Fedeli, Mr. Prue, and Mr. Sousa, and it's from the Investment Industry Association of Canada, and I'd like to call on Barb Amston to do that one. Barb.
I obviously don't know how to use technology. I'd like to congratulate you all on surviving so far, because I cannot imagine what it must be to run and talk in all of these different places. So it is good to have three incredibly qualified people. I'm very interested to have listened to all of your answers. The Investment Industry Association of Canada, we have 120 securities dealers that are headquartered in Ontario. We are the linchpin, they are the linchpin between Ontarians saving and productive investment that creates jobs and that allows the savings, that creates the taxes, and so on and so on. It's a cycle of investment. We have as members large bank-owned dealers, and we're blessed to have the bank-owned dealers that have weathered the crisis so well in the 2008 period. However, what is often overlooked is that our small dealers did equally well. We have not had any Madoff situations, and I'd attribute that directly to the Investment Industry Regulatory Organization of Canada and its use of panel auditors. We have had, in fact, which is again often overlooked, that the biggest losses in this country from investors have been from unregulated issuers and unregulated advisors. So unlike banks, whose ownership is spread amongst many people, the small dealers actually put their own dollars at risk. They have losses during some years, but they soldier on. Increasingly, though, there have been barriers to entry, and it's not just securities regulation and rules, but it's the dealers already and the financial institutions around this table are the unpaid extension of CRA. They have to issue all your tax slips at an increasing amount of cost as well. One of our small dealers closed doors last year, not because of, revenues were difficult to earn, but really it was on balance. It makes sense for our shareholders to redeploy their capital, and that was because of the regulatory cost burden increasing. Red tape reduction in the views of our smaller members, seems not only to be tolerated, but almost encouraged in the name of the investor. So the small dealers are the ones that could deal with the smaller clients that have the great ideas that we want to get to have grow and then finally end up on the Toronto Stock Exchange. They are dealing with clients that the larger bank-owned dealers will not deal with. My question to you, and sorry, Mr. Sousa, I do have kind of an extra question for you, since you've already answered the one about the CCMR, the Canadian Cooperative.
Yeah. Well, Barb, do you want to make the one question for all three, and then we'll go from there?
I will go from there. So recognizing the need to reduce Ontario's deficit and debt to restore the province's fiscal maneuverability and choices, what will each of your parties do to ensure regulation while protecting investors, also allows small securities dealers, helping retail Ontario clients save for retirement and Ontario firms finance their growth, to remain competitive? And in Mr. Sousa's question is that it seriously, the CCMR seriously simplifies without reducing compliance.
Okay, and the order on this one will be Mr. Fedeli, Mr. Prue, Mr. Sousa, and all three of you are free to deal with, I guess we'll call it a two-part question, as you would like to do. So, Mr. Fedeli.
Thank you very much. Look, you got it exactly right, that the first thing we need to do is balance the budget, pay down our debt. It's the single most important thing we can do to create jobs. What we've seen in the last 10 years, well, first of all, it took 137 years for our debt to reach $139 billion. And in the last 10 years, we've seen that debt double. This year alone, our deficit will be $12.5 billion, and that, of course, is larger than all other provinces and the federal government combined. We've seen all three credit rating agencies downgrade Ontario's debt, and thankfully, the election was called, or we would have seen yet another downgrade for this past budget. We know from the internal cabinet documents that the Liberals have, and I'll quote, no plan to balance the budget by 2017-18, and that's from the Ministry of Finance documents. I have my copy of my book, Focus on Finance. I'm not sure, Charles, if you've had a chance. They're up top there. And if you haven't, just Google me and write to me and we'll mail you one. It releases all of the Ministry of Finance internal documents that talk about the fact that there is no plan today to balance the budget by 2017-18. And so, you know, through our Million Jobs plan that we do plan, the PCs do plan to balance the budget by 2016-2017. We're the only party that's been honest with you on what it takes. And to your red tape, you know that our Million Jobs plan also would reduce red tape by 1/3 over the course of the next 3 years, because it's costing Canadian businesses $11 billion annually.
Thanks very much, Mr. Fedeli. Mr. Prue.
Yes, thank you very much for the question. I mean, this is, again, a very complex issue, and we will start with at the outset by saying we need to sit down and talk a lot about this. But having said that, I was a little bit perturbed by some of the government actions in the last little while. There is a special selling group that sells government bonds, and in the past they've been allowed to sell 2% of the government bonds. This year they've been cut to 1%, and the share that they used to sell has gone to the big banks. And some of these people have approached me, and I'm sure Mr. Sousa and Mr. Fedeli as well, and wondered just why is this happening. It seems to me that we have an obligation to encourage and nurture proper competition, not just to give it to the big guys. And we do that for the benefit of the investing public. We do this in order to make sure that these small firms are able to compete and that they are able to sell the bonds on the market or find customers to sell them, rather than hurt them. And I know that one such company called me and said that they were going to have to lay off staff. I doubt very much that there was an increase in staff to the banks, but there certainly was a layoff staffs in this one small firm that historically had been allowed to bid on the 2% of bond sales. This is not good practice, and we would go back to allow a much more open market for all of you in this room to compete with the big banks, and that's the statement I really want to make.
Thank you very much, Mr. Prue. Mr. Sousa.
Yeah, thank you, and congratulations on the work that you do. I mean, Ontario, Toronto is a financial global hub. It is interconnected with so many sectors around the world. So much of a push exists to tighten up regulation. We can't go over. Yet Ontario, Canada, is the envy of the world because of the things that we have already done. And so we'll certainly look at the rules that are in place, but we must be competitive. and we'll work closely to do that, and I commit to doing that, and I said so in the budget. We need to ensure that there's a balance and that there is no way that we can be over-regulated at the expense of our competition thereafter. And as mentioned, it is a complicated issue because we still want to protect consumers. So I'll work with the Ontario Securities Commission. We'll do what's necessary with the Cooperative Securities Regulator to move forward. But also, you're an informed bunch. You know what Mr. Fedeli is saying is exaggerated because Ontario has strong economic fundamentals. We are a sought-after jurisdiction around the world because of the investment opportunities that exist. And it's our debt to GDP that really matters, as well as our revenue to GDP. And Ontario stands around 38%. Canada's around 37%. And that, in comparison to other parts of the world and Europe, it's at over 100%. So you understand that we must build our GDP, we must invest to grow the economy, and we can't do that without dealers and access to the capital markets. The PCs and what they're proposing to do is going to hamper that growth, curb that ability, and put us even more at risk. We have exceeded our targets 5 years running. We have taken measures of austerity seriously. It's why we are the lowest cost government now in Canada, lower than the federal Conservative government as well. We'll stay the course. Thank you.
Okay, thank you very much, Mr. Sousa. That completes our round of prepared questions. We actually have, I think, time for about 1 or 2 audience questions. But let's give our panelists a round of applause for getting through 7 complex. Thank you. So if you want to ask a question, if you're sitting at these seats, of course, you have a microphone. You can push the button. There's also a microphone right back there at that sort of desk, if you will, that you could use. Those that do want to ask a question, we'll obviously keep it brief. We want questions, not statements. So is there anyone that would like to ask a question of our... Yes?
Hi. I think you can hear me, right? Okay. The debaters at the front can hear me, yeah?
I can hear you.
Okay, wonderful. I was just wondering if you, if all 3 of the candidates believe that the OBSI should have any real enforcement power, and if not, what is it for?
Can you, just to make sure, can you spell that out, just to make sure we all know which?
OBSI as in the Ombudsman for Banking Services and Investments.
Okay, so did everybody hear that one? Okay. All right, and the order, sorry, I better pay attention here. Start with Mr. Sousa, Mr. Fedeli, and Mr. Prue, the order on that one. So if Mr. Sousa.
Yeah, I mean, the Ombudsman in the financial services industry is there to protect consumers and ensure, and every bank has one. I believe even credit unions have an overseeing body if necessary, and it's important that we continue to provide the necessary steps and appeal processes where required by some who are in need. So, you know, we take comfort to some degree because our system has been very strong and continues to do what's necessary when it relative to global market. But we want consumers to have access. But we know we're in a competitive environment, so we're looking in our budget. I also included other forms of access to capital. We've working closely with venture groups as well. The part that really gets difficult is when we're talking about mezzanine financing or equity financing, and that's where you get some of the issues, especially at the small end, the small business market, and that's why credit unions have done a great job. That's why certain branches of the banks are there to provide for that support. But an ombudsman plays an essential role in making certain that consumers and businesses are protected. Thank you.
All right, thank you very much, Mr. Sousa. Mr. Fedeli?
Thank you very much. Look, as we all agree here, there's nobody in this room, I believe, that would not agree that oversight is very important. People need to put their head on the pillow at night and know that their money and their investments are safe, secure, and that they need to feel protected. I think everybody in this room will agree to that. Thank you very much for the question.
Okay. Mr. Prue?
Well, it's a pretty simple one. We believe in that kind of oversight. We believe in all of the ombudsmen or ombuds people, I guess, in the province of Ontario, whether it be Mr. Moran or those who work in the banks or the insurance companies, those who work in the hospitals. Someone always needs to have a person or a body to go to if they feel that the system isn't working for them. That does not change within the financial sector, within the insurance sector, or anywhere else. There needs to be someone who can look at, see whether the system is playing out properly and is not being particularly hard on an individual or a corporation. And so I welcome the Ombudsman staying there and would welcome enhanced powers if upon your advice that was deemed necessary.
Okay, thank you very much. Anybody else that wants to go? We think we can squeeze in one more? Yes, go ahead.
Hi there.
Do you want to just use the microphone just to make sure? Yeah, sit, you just sit, push the button so it shows it's on?
No.
Oh, it's not. Okay, then you will have to shout. Sorry about that.
As you may be aware, in the province of Ontario, currently there is no regulation around the use of the term financial planner, and in fact anyone can more or less call themselves a financial planner. I'm wondering if you support the Financial Planning and Standards Council's ongoing campaign to professionalize financial planning and in fact put some regulations behind who can call themselves a planner, whether they're licensed to sell securities or not. Thank you.
Okay, the licensing and standards for financial planners, Mr. Prue, Mr. Sousa, Mr. Fedeli. Mr. Prue.
Absolutely, and there was a private member's bill to that effect in the last House. It didn't go. It died upon prorogation. But I do believe the vote was unanimous. I know that I spoke to the bill. I know Mr. Fedeli spoke to the bill. We all support it. We all expected it to proceed, and I am confident that come the next legislature, whoever is in government, however the party structure is maintained, it is an idea whose time has come, and I don't see any real difficulty failing prorogations and those kinds of things. But certainly everybody understands the need, and we need to make sure that those who are dealing in people's lives have some kind of training and a qualification that can be called forward if they make really bad decisions. We all saw, probably everyone saw the CBC show on the Marketplace about some of the bad decisions being made, and I don't think any of those were financial planners, but certainly they were giving out advice that was not the best. We want to try to put an end to that, because people who lose their life savings expecting to have it in retirement lose a lot more than just their life savings. They actually lose their ability to function.
Thank you very much. Mr. Sousa.
Yeah, I mean, we're having discussions right now with financial planners in the industry to find uniformity and the notion of having a certification and some recognition as to the expertise that is involved to be recognized. And many from the field are requesting it so that they do legitimize some of the advice and avoid some of those that have come and gone, right? So that is critical, and it's also there for consumer protection and investors' protection. But to call themselves a financial planner is essential. But, you know, I would also say that anybody who calls themselves an economist should also have some relevance on how to do arithmetic. And Mr. Hudak prides himself on being an economist, brought forward Fedeli is priding, and their whole platform rests on this. Be noted. He's priding himself on a book that he just handed out that talks about numbers. This is a number that Mr. Hudak has put forward. You know him to have one job. He's been an MPP for 19 years. You would see that as one job. In his calculation, in Mr. Fedeli's book, he's saying, oh, that's 19 jobs. A person year is related in his book as one job. And their whole premise on his million jobs plan, which, by the way, already addresses much of what we put in our platform and in our budget, because more than half is already underway, and we've already achieved 700,000 jobs since the depth of the recession. But to get that arithmetic wrong, that elementary mistake, is so critical. He's double counting even now about wage freezes. So I would say this. The 100,000 people that he's about to cut, and he's going to fire a teacher, maybe he should go to that teacher and get a math lesson. Thank you.
Thank you very much, Mr. Sousa. Mr. Fedeli.
Well, I must say, I am going to answer your question in a moment, but I have to address that utter nonsense, and I am going to call it utter nonsense. First of all, it's obvious you haven't read my book or much of your own budget, because what's in my book is all quotes from the Ministry of Finance, the Auditor General, the Ministry of Labor. There's nothing about the Million Jobs Plan. It's all about focus on finance, and it talks about the precarious situation that Ontario is in and how we got there in the last 10 years. I really do encourage you to read it. It is all based on Auditor General and leaked documents from the Ministry of Finance whistleblowers who have given us so much concern in Ontario. You know, when you don't have a plan of your own, all you end up doing is attacking the other people. And I find that is really patently sad in the province of Ontario. So I will address your question. I have been a lifelong entrepreneur. I was a two-term mayor, and I'm in my first term as an MPP, and I would have considered myself fairly knowledgeable. I was shocked to know that there are no designations or requirements. Anybody can call themselves a financial planner. I'm not telling you anything you don't know, but I only learned that since I became the finance critic in Ontario. I was shocked, and I'm sure most people in Ontario, if they were to understand that, would be as shocked as I was. So obviously something needs to be done in this sector. We're going to continue to talk about whether it's the private member's bill or a bill from the government that would accommodate this, because the people of Ontario have a right to know that they really can put their head on their pillow soundly at night and understand solidly that their financial planner is somebody who's trained in this sector and responsible and reliable and will be held accountable.
Thank you. Thank you. Thank you very much. And thank you to our questioners. We appreciate that. We're now going to move to closing statements, and the order that was drawn for that will be Mr. Fedeli, Mr. Sousa, and Mr. Prue. So I would now call on Mr. Fedeli for his closing remarks.
Thanks very much. Thank you very much for the opportunity again today to be able to share with you some of the PC Party, our plans, our philosophies, and just to have a good exchange of ideas in your particular sector. Look, as I said earlier, I traveled to 30 cities just this year alone, and things are not well in Ontario. We have become a have-not province. This is the first time in our history that we have let the people of Ontario down. And we will do everything in our power, everything, to balance the budget and put 1 million people back to work. This is so critically important to the families who cannot afford their hydro bills today. There's a young man here, his name is Neil. He's the youngest person in the audience. And up in the reception, I said to him, Neil, do you realize, I think he's 20 years old maybe, Neil, do you realize with the Ontario's deficit and our debt today, you owe $22,000 already, and you're not even finished university yet. This is a situation that none of us grew up in the province of Ontario. We need to fix the problems. We need to be honest about the problems. We need to be honest about the solutions that you all know we need. I'm going to read a quote here. Ontario faces more severe economic and fiscal challenges than most Ontarians realize. Unless policymakers act swiftly and boldly to prevent such an outcome, Ontario faces a series of deficits that would undermine the province's economic and social future. These aren't my words. These aren't from a PC press release. They're posted on the Liberal government's own website. It's Don Drummond's report that was commissioned by the Liberals, released in 2012, and sadly, the hard, biting issues that need to be addressed have been left unaddressed, and that's why today we have a $12.5 billion deficit that is going to continue to increase unless we do something about it quickly, and we know what we need to do. We need to implement Tim Hudak's Million Jobs Plan. And thank you again for a wonderful opportunity to speak to you today.
Thank you very much. Mr. Fedeli, Mr. Sousa.
Thank you, Janet, and thank you all those that asked questions. Thank you to TFSA for the good work you do. Mr. Fedeli has just given you a contrast. We have a very difficult choice to make, but it's actually very easy because the contrast is so severe. On the one hand, on June 12th, you can go to a race to the bottom, or we can build Ontario up and continue to race to the top by making those critical investments that will enable us to compete. We have been very disciplined and determined in our spending. We have actually cut spending year over year just last year. We've implemented over 80% of Don Drummond's recommendations. Mr. Fedeli will give you all kinds of things that he'll tell you, but he'll never tell you what it is that we've done to recalibrate and take the steps, because it's important, of course, to recognize the challenges before us. I brought forward a 20-year report indicating those very challenges, so that we know the demographic changes and the things that are occurring need to be addressed. You can't put your head in the sand, go back to glory days of the past, and compete at low wages on assembly lines and think you're going to win. That's not the industrial age of tomorrow. That is where we have to look forward. You need a long-term vision. The budget, the platform that we have given the public is a 10-year plan. It's not election cycle politics, and it's not short-term vision. And it's certainly not using incorrect math. We do everything under the review of economists. We are assessed, we are audited. Everything I do is has the eyes of integrity. In fact, the C.D. Howe Institute and others have indicated that Ontario numbers have the most integrity of any government in Canada. And we still give out $11+ billion more to the Federation than we take in. We are still a net provider. And we have so many sectors in our economy that we've now addressed that enabled us to be even more competitive, more than all other provinces combined. It doesn't come by accident. It comes by working together with the people of Ontario. Over 600,000 submissions came my way. I traveled and crisscrossed the province as well. And they provided their ideas and their priorities. And that is what was presented in this budget. A very balanced budget that talks about being as compassionate as we are competitive, talks about being as fair as we are prosperous, and it's that fine balance in our civil society that makes us an attractive location to do business and where people succeed. And that is what we have going forward. Thank you.
Thank you very much, Mr. Sousa. Mr. Prue, the final word to you.
Thank you so much. I first of all want to thank all of you for coming out. I hope I have answered the questions. I didn't try to get into some kind of polemic debate with my two colleagues here, you know, who like to attack each other more than they'd like to actually answer the questions. I try not to be parochial. In fact, in the House, they said I'm one of the most non-parochial people there. I want to recognize your expertise. I want to say that the New Democrats want to work with each and every one of you in order to make financial planning and financial transactions more open and accessible. We need to, at the outset, recognize to balance the public need and financial institutions' needs, and they need to be in harmony. We believe in the New Democratic Party that you need to reward companies for creating jobs. And that's central to our platform about how we get there. We don't have, you know, mathematics like some of the others. We just think that you just reward those who create the jobs, and the jobs will be created. We're asking all of you to put Ontarians back to work. The people in this room can put Ontarians back to work better than governments, better than anyone else. Please make sure that there are jobs, especially for the young. And last but not least, I'm asking all of you to not go down the path, the easy path of finding the cheapest ways of doing things. I've had phone calls in the last few weeks, people who work in financial institutions who tell me that the practice of bringing in foreign nationals, training them so that they can take the expertise back and things can be offshore is continuing. I'm asking you to have faith and trust in the people of Ontario, the people who need to have good jobs, just like all of you have good jobs, who need to provide for their families. We can provide that expertise and those jobs here, perhaps not at the same cheap rate, but certainly with much more benefit to everyone in society. Thank you again, all of you, for coming.
And thank you. Let's give them another round of applause. A great performance by all three. We thank you very, very much for your commitment to this, for the time that you've taken. I know it's a pretty hectic time. There are some things I don't miss about politics, and we really do appreciate that. And to all of you who came today for your interest in this, we appreciate that. Daniel, thank you very much, member of my team who put in an awful lot of work to pull all of this together, all the representatives of the associations. I think it is one of the other unique features about this industry that even though they can compete like crazy out there in the front lines, they do know and can work together collaboratively on important issues of mutual benefit. And again, we benefit a lot in this town, I think, from that kind of approach. So thank you very much for all of you. I hope you have a wonderful weekend, and remember to get out and vote. Thank you.